The financial system just got a major injection of cash. The US Federal Reserve has quietly pumped $38 billion into markets in just 10 days. But why now? And what does it signal about what's coming next for Bitcoin, the broader economy, and your own investments? Let's break it down. The reason the Fed is acting now is simple: year-end funding stress. Banks need more liquidity to meet short-term obligations like tax payments, redemptions, and balance sheet adjustments. Liquidity often dries up in December, and rather than risk cracks in the system, the Fed is stepping in early to smooth things out. This latest move came through repo operations, short-term loans from the Fed to large financial institutions to keep cash flowing through the system. On December 22nd alone, they added $6.8 billion. It's essentially emergency liquidity support, and we haven't seen action like this since 2020, right before the last big bull cycle. More liquidity means more money in the system, and when cash is easy to access, risk assets like Bitcoin, tech stocks, and growth investments tend to benefit. That's why people say the money printer is back on, because this type of injection fuels financial markets. Bitcoin in particular thrives in environments with rising liquidity. It's seen as a hedge against inflation for many, fiat dilution, and system stress. So this could be the start of a new cycle, but markets haven't fully reacted yet. So what's holding things back? For one, ETF outflows are still happening. Institutional money is pulling back, and we're seeing steady selling during US and European trading hours. At the same time, Asia has been buying the dip, but that hasn't been enough to reverse the pressure just yet. If you're an investor, this sudden liquidity shift is a warning sign. The Fed might be seeing something under the surface that they're not openly talking about, but for you, it's a chance to reassess your exposure. But don't rush into trades assuming a rally is next. It's better to hold strong assets and stay flexible. Pay close attention to ETF flows. If they start turning positive again, it could confirm that a new bullish cycle is taking shape. That said, caution is still necessary. Big players like MicroStrategy are sitting on cash instead of only adding more Bitcoin. All coins are underperforming. There's regulatory noise and global uncertainty. Even with the liquidity boost, sentiment remains fragile. So stay alert, watch macro data, investor behavior, and most importantly, follow the money. Subscribe for more direct market updates and weekly crypto insights. And as always, stay curious and stay hodling.